After the Thursday morning CPI print, the market has been absolutely wild. Riz and I are going to talk about what is going on. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap webinar. And before we get into it any deeper, I want to make sure you go ahead and click that like button and subscribe down below. Give us a little hand, help the channel grow, and we will keep putting out some awesome content for you. But we've got Riz back fresh off the plane from vacation. Riz, how are you doing and how was your time away?
It was good, Chris. Thanks for holding down the fort.
Of course.
It was good. I was working. I was working
Yeah.
throughout the trip. We went to Singapore and Maldives. We went to Singapore for the F1 Grand Prix for 3 days, and then flew out to Maldives for 3 days. No, yeah, 3 days, and then the last 4 days were in Singapore once again.
Nice.
And then we flew back. It was a long journey, about maybe start to finish, probably about 25, 27 hours total.
Ooh, man, that's some travel time. And guys, I just want to let you know, Riz is always working. I mean, it's like he tells us he's taking a vacation and he's always posting updates in Elite. Was taking trades the whole time. It was crazy, guys. So even if Riz takes a break, he never really takes a break.
Yeah, one of my trades came, which was a solid one, was the first time ever I officially traded from about 33,000 feet.
That was nuts.
In the air. Yeah, and that was a win. That was a quick, actually a quick little trade because even though you're in the plane and you can pay to get the Wi-Fi,
Yep.
it sucks. Honestly, it sucks. It's not something I would bother with, but I knew that I was going to be up in the air at open, and I wanted to see if I could get a quick trade in because I was anticipating a setup, and it was on AMV at that point. And we traded it again and made some money on the short side on that. So that worked out well. But yeah, I appreciate you asking. The trip was good. Got a bit of rain, a little bit more rain than I expected, because usually it doesn't rain at this time of the year in Singapore. But I guess, with weather being haywire everywhere, and there's been a lot of rain in Southeast Asia this summer with flooding and everything. So the theory is that some of that kind of eventually made its way with some monsoon and rain in Singapore. But yeah, I mean, these things happen. Nonetheless, it was a great trip.
That's awesome. I'm glad you had a little bit of a break. It's always a pleasure to do that. But let's get to the market, because it has been a wild and crazy week. After we had what I would say was kind of the bounce here, a little bit of a recovery rally the week before, and then we started on our way back down. And then, of course, this week was the big news, the CPI print, and it wasn't too good, to say the least, and we had a huge gap down in the market. But I have never seen a bounce like this before in my time. Riz, what happened with this? I mean, the print was so bad, but yet the market went up like 7% or something like that?
Yeah, so here's the kind of, we always have to decipher what the market's doing, and sometimes it's easier, sometimes it's a lot more WTF, so to speak. So this is one of the WTF times where we have a bad CPI print. In other words, CPI was higher than we anticipated, meaning inflation continues to remain a problem. It's not coming back down to earth just yet. And well, lo and behold, it wasn't surprising that we had a gap down open, near the 3,500 level, 35, 20, 25, whatever that is. But ultimately, what was something that really, clobbered all the shorts, clobbered everyone that had a short bias, or were anticipating a continuation lower. Just It was a face ripping rally. And that was unexpected. That was unexpected. And to kind of demystify what was going on, is the market felt like, okay, inflation is not going up significantly. It's kind of finding a base, so to speak. And they're anticipating, because of this, that the Fed will do another higher rate hike. Instead of 50 basis points, sorry, it's all but guaranteed they're going to do a 75 basis point hike on November 2nd at minimum. But the market also now is factoring in, as well as bonds are factoring in, that they might do ginormous or outsized rate hike on November 2nd, as Chris outlined here, and that could be a 1% hike. Now, we've been here before where the market's like, okay, CPI is still not going down. The Fed might do a 1% hike, and they haven't done it. They haven't done it. They've talked about it, maybe, and that's one of the reasons markets, surprisingly went up, because they took it as perhaps being cemented in stone that the Fed is going to do at least a 75 basis point hike, and then a 1% perhaps, uh, even. Now, for those of you that are thinking ahead and thinking, well, Riz, I thought rate hikes aren't ideal or they're not good for the stock market. And I would say, yeah, you're right, all things equal in a vacuum, but the market wants to see the Fed step in more aggressively now, simply because, which is lesser of the two evils, so to speak. Higher rates, meaning slower economy, higher cost of borrowing, right? Because of higher cost of borrowing, everyone's kind of saving more, everyone's tightening up the waist belts, or inflation, which is effectively the erosion of your money, and that impacts every single dollar. Okay, whether you are rich or poor, it impacts the value of the dollar. Sure, the people that are more wealthy are more insulated, less impacted, but it still matters, right? $1 is $1, whether you're a millionaire or whether you're on food stamps or whether you're a billionaire. The value of $1 being worth less, in this case, 8%, 8.5%, that is not good. And that is not something that you can kind of correct. With high interest rates, you can decrease them. With inflation is always there. It's like it doesn't, it's not going to go backwards. It's already factored in. So the erosion of the dollar is, I would say, it's like a nuke. And I don't want to make light of the current situation, but it's like a nuke for your dollar, where you can't pick up the pieces again. There's nothing left to pick up if it goes too far out. So if there's one of the two evils, a bigger evil, is it's definitely inflation. So that's how the market's taking it as well. We gotta get inflation down, and that means this recent CPI print could effectively play the hand of the Fed in raising potentially 1% this November 2nd, right? And not only that, we have the final meeting for 2022 year is on December 14th. Okay, maybe you guys want to note that down too. So here we have it, the kind of a bit of a mystery solving here, demystifying what occurred this Thursday, which was frankly absurd nonetheless. Even though we could make sense of it and rationalize it after, it was not easy going through. It was not easy seeing that face ripping rally after being down to about 3,500 on the SPX, which is was nearly like a 2.5% pullback. And then not only that, we had the run up, and then the market closed up approximately 2.8, 2.9%. And that was almost a 7% intraday delta, meaning a 7% difference from the low to the high. That is, I think, the fifth time that's occurred, from what I recall, over the last many, many, many decades, if I'm not mistaken. The last time I can recall personally, I don't have the data in front of me, but the last time I can personally recall was in Q4 2008. And I said that on Thursday as well, because it was just something that just came back to me, and it was like, oh my God, this is like deja vu. And not to say that, this is 2008, because I don't want people to freak out, because 2008, it's like one of those things where every time you mention, 2008, you get a bitter taste and an aftertaste in your mouth. Rightfully so. So I don't want to jump the gun and say that's what it is, but the price action wise, wow, it was absurd. And I don't think there's any way to predict that. All we can do is kind of just manage our risk and make sure we're not completely exposed to either side. People that were piling in on the shorts the moment the CPI print came out, they were happy for maybe a little bit, and then they got their faces ripped off. So you want to be careful and always manage your risk, because as we know, we can't tell the future. No matter what, we can only do our best to look at it from a probability standpoint, prediction standpoint, and most importantly, from a risk management standpoint.
And I think that brings up a really good point is, one of your key concepts is being agile in the market. It's like sometimes when things aren't going your way, it doesn't necessarily pay to just kind of keep holding on indefinitely, because if you were short at that CPI print, like you said, you had about 5-10 minutes of happiness before it all fell apart. And if you were there ready to go, you might have been able to get out and not get your butt handed to you. But still, it's one of those things where you have to judge it at the time. All right, let's keep moving forward here. Let's go ahead and take a look at the breakdown for the S&P 500 here. And I feel like it's more of the same from last week. Things were kind of looking up, and then the bottom fell out. But energy still remains up over 40% on the year. The only sector right now that we have that we're looking at that is positive, everything else is negative, and in the double digits, no less. Healthcare and utilities both down almost 12%. Financials down 20%, the S&P down almost 25%, and then tech and real estate just getting absolutely hammered, down at negative 34% about a piece. Riz, man, it's looking pretty bad.
Yeah, this is looking bad, but I do think, well, not to sound the alarm and make people panic further, because I don't like to go from one extreme to the other, which is extreme panic to extreme euphoria. I like to be a little bit more sensible in my approach, and I can say that I wouldn't be surprised if we have further downside. Friday confirmed that. Um, you know, we saw that big pullback in an inside day, if you want to call it, as Chris has brought up, right? So we kind of gave uh, a decent chunk of the gain on Thursday. We decently gave it back on Friday. So it wasn't all that surprising because Thursday was such a wild day. Yeah, you have bad CPI print. Yeah, the market feels like the Fed is going to raise 75 basis point to 1%, but that doesn't solve the world's problems. It doesn't cure world hunger. It doesn't fix everything. It just means that the problem is still there and that the Fed may react a little bit more aggressively, which the market wants. That's it. It doesn't mean inflation's back to 2 to 3% area. So it wasn't surprising at all that the market pulled back on Friday, and in fact, some of us shorted that and made money. So congrats to those of you that did. And personally for me, I do think we could see a little bit continuation down. Remember, we're just 25%, and I know I say just, but it's all relative, but 25% down from all-time highs. It wouldn't be surprising to see us go lower as inflation is continuing to be a bit of a fickle child, so to speak. It's being a pain, and it's not willing to relent. And I mean, there's no way to sugarcoat this, but this isn't surprising, right? This isn't surprising. I, for one, have been talking about it since 2021, since middle of 2021, where I've been sounding the alarm bells for anyone willing to listen. Again, I can't impact policy. I'm just one guy, but it wasn't surprising to me, and that's one of the reasons why I have a significant portion of capital cash sitting there. Ray Dalio was saying cash is trash, I think in 2020 or something, and he even came out just a couple of weeks ago or last week, I think, saying he was wrong. Cash isn't trash, and yeah, we have very high 40-year high inflation. Um, but it's really the best performing asset class still. Would you prefer to lose 8-9% of your value of your dollar, or would you prefer to lose 25% in the market, right? So that's kind of the way you want to look at it. And ultimately, the US dollar has done well from a performance standpoint compared to other currencies, even after inflation. So the US dollar cash, so to speak, hasn't been too bad. So kudos to Ray on kind of changing his view and being wrong and changing it, because we can all be wrong. It's about being malleable and reassessing the data and coming back and changing our views. That's what makes us human, right? And whether that's market, whether that's relationships, whether that's politics, uh, everything, it's important to reassess and come back and acknowledge that. So I do feel like I'm in a good position to be waiting for cash. I do have some positions obviously that are in the red, but Some of them I'm a bit frustrated with, but most of them I have no problem carrying.
That's good to hear. And yeah, having some cash right now, always a good thing. Listen, when the market goes down, that presents a buying opportunity. Just always remember that. We're not necessarily just buy the dip every time blindly, but be ready. And all of our elite members know when those times to be ready are. We've released our dip buy list, our strategy, and we stand by that. Of course, we can't discuss that here. That's for our elite membership only. But yeah, it pays to be part of elite. That's for sure. Let's go ahead and take a look at the asset classes here because we've definitely had some movement, especially in oil. Now, we kind of talked about last week about the OPEC Plus announcement, and everybody's saying, oh, they're cutting production. And Riz, you kind of alerted us to the fact that that's not exactly the case. What's really going on with oil here?
Yeah, so they cut their production output guidelines. They were already not meeting production output. Like they were essentially dropped the shortfall, so to speak. So they were not meeting the production guidelines as a whole, OPEC plus, and then so they were missing it by about three million barrels. So what they did was they just sorry, I think yeah, I think it was 3 million barrels. So I think they just decreased that and by 2 million to the market. Kind of at first felt like, oh, okay, they're cutting production by 2 million. They're not cutting production, they just cut their output forecast, like their threshold. So instead of missing it by 3 million, they're missing it by 1 million, right? Doesn't mean they've cut production. But with that said, there has been continued talks of OPEC plus, actually doing a production cut and decreasing, uh, the coming month in this next month. But not only that, what they have done is they're charging the US more per barrel than they are Europe. So politics aside, I'll let you guys decide what's going on there. But that we do know is true, where the US is paying a higher price per barrel to import crude compared to Europe. Again, it's obviously a lot of geopolitics and all that. Because I will tell you, OPEC is the oil producing uh, energy cartel. And then the plus in there, for those of you wondering, OPEC plus, that's Russia. Okay, that's Russia. So let that sink in there. Obviously, it's in Russia's interest to um, and OPEC's to have oil prices be not too high. I'm not saying 120 because they don't want that, because they're not stupid. They don't want absolute demand destruction like we saw in July and August, and even leading into September. But they do want prices to be stabilized around here. Hence the potential production cut. Hence, kind of squeezing the U.S. And charging them a little bit more. Than Europe per se. So I'm not too surprised at a little bit of a pullback here at 85. I don't think oil is going back to 120 or anything anytime soon, if ever, in the next recent. I don't want to say ever, but in a recent time horizon, I don't think so. But we do want it to come back lower. I think higher oil, as I've said before, I don't think, but I know so that higher oil uh, is it's bad, but we can sustain it so long as it stays around here. If it goes to 90 or 100, then that's when things really start rolling over, because then prices at the pump get way too painful. Not that they're like everyone's celebrating, but it gets a lot more painful when we start seeing 90, $100 per barrel. So I think we should be safe, all things considered. We did have a very strong summer in regards to oil demand, which the U.S. Body that kind of gauges and tracks oil inventories on U.S. shores and offshore is essentially saying there could be lower demand heading into the winter season, which I often say, duh. I mean, I've been saying that, summer is driving season and travel season, and we see that pull back and less demand during winter. Not surprising, it happens every year. So it remains to be seen as the economy continues to, kind of work with high inflation, and as the average consumer is now effectively in a position where they are aware now. Before it was like inflation, what's inflation? Now everyone's aware because they're seeing it on primetime news, they're seeing it on mainstream media, they're talking about it with their friends, and maybe they don't know 100% what they're talking about, but they got the gist that, whoa, inflation, it's this dark horse, it's this, redheaded stepchild where we don't want to deal with it. We need to get it under control, and people are facing and aware of the impacts that it has in their day-to-day life, whether it's from groceries, gas prices, housing prices, affordability. They're dealing with it. As a broader economy, as we see major companies continue to lay off staff, especially in the tech sector, lay off people, cut jobs, and of course hiring freezes as well. Wage increases have kind of stopped. So it comes down as one of those things where everyone's feeling the pinch. They have been, but it's becoming more and more. It's kind of like that. It's kind of like that sore on your right at the middle of your nose, and where people will think you're Rudolph the Red-Nosed Reindeer, but it's really like a really bad sit, and you're like, I can't ignore this anymore. And that's what inflation and the current economy is, right? We can't kind of bypass it. Whereas all the real estate agents and gurus were like, yeah, it's going to be fine. Well, I don't say all because there are some good ones, but the majority of the idiots who are really just trying to stick people with bad homes at horrible interest rates are like, yeah, everything's fine, it'll be great, just put 5% down and this house is not going to lose value. Well, they were completely fucking wrong. And as I've been saying, that I'm just reading the chat here. Sorry. As I've been saying that housing prices have come down, they continue to come down, and I wouldn't be surprised if they continue to go lower in 2023. You can quote it, and when I'm wrong, or if I'm wrong, sorry, I should say that. Feel free to send me a message and be like, "Hey, Riz, you were so wrong. Housing has recovered," and I'll be like, "Sure, okay, yeah, I was wrong." But if I'm on YouTube and if I'm doing this live and I'm saying house prices has more room lower, you can bet your ass I'm most likely not going to be wrong. But hey, I can't guarantee it. But yeah,
If there's one thing I love about Riz, it's how humble he is in his opinions and things of that nature. But I find that very interesting. Getting back to your point about OPEC Plus charging more per barrel to the U.S. than Europe. That's interesting. Again, not going to speculate as to why that is. I'm sure you guys can figure that out. But
yeah,
one thing, yeah, go ahead.
yeah. I feel like let's all do 1+1. Hopefully,
Mm-hmm.
I'll get two. Right?
Yeah, for sure. Now, gold has been taking a bit of a hit here since about April. We kind of came back up, hit this top area that had been acting as resistance around this 1970 area, and we've really been in a pretty solid downtrend. Riz, is there anything behind this? Is this because of the strength of the
Yeah,
dollar right now, or is there something else going on?
yeah. Definitely the dollar for sure. But beyond that, it's kind of absurd because right now, for those of you that are more culturally diverse, if for Indians, um, and I don't want to say all Indians, but Indians of a specific religion or culture are celebrating, or it's coming up to be Diwali time, which is one of the largest holidays or kind of festivities for Indians, where they buy and gift a lot of gold. Right? India is known as one of the largest consumers or buyers of gold internationally, and you would think that this would have a positive impact, or the market would have priced that in a while ago, where, okay, Diwali is coming in the next few months, this is going to be a demand, uh, higher demand situation, but that's not happened. That's not happened. We've seen almost a complete retracement of last week, um, right? And it's crazy. So Diwali is coming. They're gonna buy gold. We know that, but it's not factoring in. All things considered, gold is down. It's been in a down channel. It's been a downtrend, and it continues to be so. It completely rejects that 1700, 1720 mark once again, and then rolls right over. So I wouldn't be surprised if we see 1600 again. I'm not shorting this. I'm not trading it. Just kind of like oil, I have just kind of not bothered with it so much this year, um, simply because of all the other wackiness and opportunities that are out there in equities and and equity options, right? And not to mention futures, SPX futures specifically. But yeah, I'm not trading, oil or gold futures or oil and gold ETFs because I find there's better opportunities.
Awesome. Thanks for that gold insight. One thing that I had talked about last week, getting to cryptocurrency, is we're talking about we're approaching my resistance line that I had drawn for quite some time ago, to say the least. I wanted to see what was going to happen, and well, it was somewhat anticlimactic in some way. Sometimes the way crypto is, we kind of just came through it and walked right past it. And just kind of wanted to talk about that. Technical analysis is not everything, guys. It doesn't mean that there was anything that was going to happen when it came here, but I was interested to see if something was going to gonna go. But really, crypto is just kind of languishing right now in between this 20,000 and 18,000 area. I know Riz has warned if we break through 18,000, I think it's maybe lights out for Bitcoin, but we'll have to wait and see if that happens, or if we just kind of sit here and trade sideways, because I mean that's really all that crypto is doing right now.
Yeah, you can see that candle wick there, just
Yeah, that one.
right at 18,000 area and then pick back up. And that coincides with Thursday, right?
Yep.
That coincides with Thursday. So you can see that crypto very much in line with market movements, specifically tech sector, especially. And yeah, again, if it really breaks below that 18,000, we could see it go lower. Not to say it's going to go to zero or completely get wiped out, but it will definitely be bearish for crypto as a whole.
All right, so for everybody here who's live, I want you to go ahead and start posting your questions in the chat for Riz and myself. But I did get a few messages that I want to go ahead and go over. Let me just pull those up real quick. I got this one from Anthony. He's basically asking about, we've got a couple positions that we've been holding for a while. Very solid companies, but kind of getting smashed right now. I wanted to know what our long-term plan was for those. So we'll go through these one at a time. First one's going to be Adobe. So yeah, Adobe getting wrecked. Riz, what are you thinking here?
Yeah, again, everything's getting wrecked. It doesn't matter if it's Adobe, Microsoft, Google. Everything's getting pulled back. Some more so than others, for sure. But here's one thing I always tell people, and whether you're in Elite or whether you hold Adobe, it doesn't really matter. It applies to everyone. If you hold a company that you do not have faith in anymore, or you feel that the thesis isn't applicable anymore, then that's where you have to ask yourself, okay, I can take the loss. We're also coming near the year end, for tax loss harvesting and all that. So you could say, okay, can I take the loss? Will it make sense? Then the second question you have to ask yourself is, if I do take the loss and whatever, money that I've lost and then the capital I've freed up by closing this trade, what am I going to do with that? Am I going to get cash for other opportunities? That's fair. Am I going to deploy it into another stock that could potentially also go lower? That's something you have to ask yourself and say, okay, what's the opportunity cost of holding this? What do I think about the thesis? Is this the right time to sell? Am I panicking? Am I operating on fear? Does tax loss harvesting apply to me? Doesn't apply to everyone. Is it applying to this person? So these are questions only, Anthony, you can answer. But I continue to hold these positions. Am I happy with them? No. Um, but the one consolation I ask myself is, do I need to take the loss? Do I need to free up capital? And who knows, as we get closer to year end, I might decide, okay, I'm closing so and so position because I'm, booking the loss, offsetting capital gains, or I don't believe in it anymore. I don't have the thesis. I've had the patience for it, hasn't panned out. I don't want to continue to hold this. Those things could eventually happen. Those things could be things that I eventually factor in as we get to closer to year end, but not yet. But that doesn't mean that you can't ask and answer those questions yourself. Um, so I feel like it's very, very situational. I personally am okay carrying things like Adobe, so on and so forth for now.
Probably about the same story here for CRM or Salesforce. I mean, that almost looks like a mirror image of Adobe at this point.
Yeah,
It's pretty much the same talking points, I would assume.
yeah. There's a slowdown. It's economic slowdown. Everything is
Mm-hmm.
back. Um, economic slowdown is just a nice way of saying recession. So really, some people will disagree and say we're not in a recession, and obviously others will say we are. But ultimately, um, if we call this a recession, it's not surprising that we're seeing large companies in pretty much every field, predominantly tech. And guess what? Ding, ding, ding. Adobe, CRM, so on and so forth, all in tech, all in, that kind of wheelhouse. So it's not surprising at all that they pull back. But if you look at some of their many of these companies, you look at their financial, they're still pretty good. Maybe their evaluations are still a little bit high. Definitely pull back significantly, but like Chris is pointing out, their earnings are still in line. They're not completely horrible. It's not like the business is going up for bankruptcy. It's not like it's going in for Chapter 11, or they're doing a dilution of shares. They're not doing any of that. So the question here is, it's essentially just the broader market and not necessarily the company specifically. Am I saying they're going to go to all-time highs anytime soon? No, but that's where we step in, right? As investors who have to have the time frame, who have to have the patience, who have to obviously do our due diligence, and then be willing to hold out. Ultimately, it's not rocket science, and this is where people falter in the waiting, in the holding out, right? I'm not going to say it's okay to hold every stock and bag hold it. And, there's some stocks that just absolutely shouldn't be held, penny stocks and companies with no product, companies with no, you know, sustainability in regards to operations. Um, those are the stuff you don't even think about bag holding. But when it comes to companies that have been in business for decades, who provide a good service or product, and it's not like that product and service is going under. It's not like there's no one's going to ever not use CRM, Salesforce. No one's not going to use Adobe anymore, uh, and their product suite. So it's not like that. So that's where you have to ask yourself these questions. And of course, like I mentioned earlier, it's very, very independent. One person will look at a stock and say, I love it. Another person will say, I hate it. And why does that happen? Because it's so individualistic, right? Um, sure, there's certain things that, you know, are universal. Like you can't dispute, if a PE ratio of, you know, 15 compared to a PE ratio of 30, which one is better? Those things are not, negotiable. But as far as looking at the company's moat, as far as liking their products, as far as liking their management. Those things are all a bit gray, where they'll change from one person to another.
That's a really good point. And then let's talk about everybody's favorite stock right now, which is, of course, going to be PayPal. Now, of course, there is the whole controversy about the terms of service with PayPal, the fining of people who, make posts that PayPal doesn't agree with. And then PayPal, of course, walked it back after this went viral on the internet. But honestly, the stock price didn't get hammered too bad, relatively speaking, to where it was. Obviously, it's not good. You can see the gap down here when that news came out. But yeah, this one has been getting hammered for a while. Are we still holding on to this one, Riz?
Yeah, for now we're holding on. We have earnings coming next month as well. Again, it goes up and down with the market, but we've seen it's holding that $80 area for now, and that's gonna expect these kind of bases to form for many stocks. It's gonna happen, whether it's PayPal, whether it's Adobe, whether it's CRM, whether it's Google, Microsoft, Amazon. This is gonna happen where eventually, many of these major large cap stocks and even mid caps will start basing. They'll go up and down for sure, but they'll float around an area for prolonged periods of time. That tells you that, okay, maybe the market is just done selling it off for the most part. If the world is ending, then sure, all bets are off. But all things equal, I don't think PayPal is going to end up being like $30 or something by the end of the year. It's that's just widely, I would say, I don't want to say impossible, because anything's possible, but it's just very, 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 very statistically improbable. So these are the kind of things that I always look at it. I look at it from a probability standpoint. Am I frustrated with PayPal? Absolutely. It's probably one of my most contentious holdings, where I feel like I kind of look at it and I just don't know if I should, be angry at, the market or the stock. But then I think to myself, okay, it's one position. There's others that I'm in the red with, but this one is definitely the kind of, like I said before, the kind of the the one that's misbehaved the most, and you have to decide: do you bother disciplining it, or do you just throw it, discard it, for lack of a better analogy, really. So I'm kind of on the fence for now. And like I said, we do a webinar, we get on, and maybe it's November, maybe it's December, a couple first week of December or something. And my tone could be that, you know what, I waited enough, had the patience. This is a time for me to offset my capital gains. Okay, I'm gonna book at the loss, right? That something could be. And again, I'm very transparent like that. Most people, especially the run one and done, fast money, uh, come and go type of traders out there will never talk about their drawdowns. Will never talk about their red positions. Will never talk about their losses. Will never talk about being wrong. But that's, I believe, one of the biggest things that separate us, because just because they don't talk about it doesn't mean it's not happening. It's happening, and I assure you, it's happening a lot more than even some of their wins. They just don't show up. But that's another topic as it is. But yes, PayPal is one of the worst kind of holdings for me from a drawdown perspective, at least.
Yeah, that one's been rough, to say the least. I see we got a couple people typing, but while they get their questions submitted, oh, hang on, we got it. Just came in. Okay, wanted to know, what are your thoughts on energy prices worldwide, specifically Canada, which makes sense because you live there, Riz. I'm going to say Pierre, and I'm not going to attempt that last name. Says they expect energy prices to increase roughly 100% over the next year, so double due to new taxes. Do you think this is fear mongering or legitimate probability?
Yeah, so without getting political, obviously I'm aware of the Canadian political landscape, and of course Pierre Polivier. Not exactly 100% sure if that's how you pronounce it, but yes, I am aware of PP, as he's known. Um, I feel like yes, I would definitely say without a doubt this is very much fear mongering. No one and their pet dog or if goldfish has any idea if energy prices could be up 100% or down 50%. No one knows, and especially not Pierre. Uh, he is definitely a career politician, and that, better or worse, is what it is. We got to take it for what it is. So he's really kind of talking his book and kind of going on about trying to make a point that the current energy policy in Canada, but not only Canada, pretty much across the globe, is disjointed, and it's one of the problems and one of the reasons why we're in such a particular situation with um, oil prices and prices at the pump impacting average Canadians, and of course this applies to average Americans and really everywhere, average Europeans even. So that's the kind of point he's making, and I think he's right in a sense that policy has been a very, very contentious thing, and it's I would if I had to pick one or the other, I would say it's definitely been bad policy. Uh, Obviously, looking in hindsight, uh, but as far as it going 100% up, no, no, I don't think anyone has any rationale or any proof of making that statement.
All right, we had a couple of tickers come in. Dylan wants us to take a look at KO, Coca-Cola. Maybe they ought to go back to the original recipe. Looks like Coke getting hammered here along with the market, though showing a little bit of signs of life. But man, it's a lot of whipsaw in this one.
Yeah, no, great company. Again, one of those defensive companies getting sold off along with the market. If you feel like you want to buy and hold, forget about it. Retirement portfolio for yourself or for your grandma or for your mom. Yeah, this is one of those companies. I don't think you can really go wrong with it. Is it going to be a massive, growth stock? Is it gonna, you know, multiply from here at this point? Not yet. It's going to be a slow run up and slow recovery. Uh, but that's not a bad thing. If you want low volatility, you want stable, you want defensive, right? Because people will, and Coke doesn't just sell Coca Cola. Um, they don't just sell sugary drinks. They sell pretty much, a whole suite of other, uh, you know, food and easy to eat snacks and all that kind of stuff and other different drinks. So no, definitely have a wide, diverse catalog of products they sell, and I think people are still going to rely on them, just like they'll rely on McDonald's. In fact, maybe they'll rely on McDonald's even more as it gets even more expensive to eat at that fancy restaurant. So yeah, these are the kind of companies that if you have the patience, you have the capital, you want something that's more stable, safe, and can weather the storm. These are the kind of companies for sure.
Also, a pretty decent dividend if you like holding long term on something like this. Could add a little bit of extra cash to your account. All right, so we have a elite favorite here. I want us to take a look at AMD. Everybody's favorite chip manufacturer. Yeah, getting kind of smashed ever since the whole chip crisis thing. What's your plan on this one, Riz?
Yeah, this is another company. This one I definitely feel um, is very, very undervalued. And this is where that kind of making the most of these discrepancies in price and valuations come in. This is where you have to step in. Um, I'm down on this one as well, but yeah, it's fine. I don't mind carrying. This is one of those ones I wouldn't mind carrying. And I think it's a great opportunity to buy. From a technical standpoint, people will say, well, it's in a clear downtrend, let it find a floor and move up. And I would say, yes. Let's see if it can continue to hold the 55, 56 area. We do know that if market continues to tank, so will this. So it's very much where the market goes, will go. But aside from that, if you have the time frame, you have the ability to carry, this will be one of the leaders once the market does make a turn. That I can assure you. With the higher beta, and you can look into this, this will run up faster than the market when we do, cross that bridge and start trending upwards in the market. Whether that's next year or the year after, whenever it may be, that is a fact. AMD will outperform. It's just a matter of when, right? So you have to have the ability to carry. I don't think AMD is going under. It's not like no one's ever buying any chipsets. It's not like that. AMD has definitely made a big turnaround from the earlier 2000s, and I don't think they're going anywhere. So this is a great stock. Entries will vary, obviously, but if you haven't entered yet, or this is definitely something that you want to consider.
Yeah, I got an AMD chipset running in this computer that I put together, so I can attest it's good stuff. All right, Sean wants us to take a look at P&G, Procter & Gamble. Now, this is one that makes a lot of different stuff, but getting hit, but not as bad as I would say some other stocks. Riz, what's your look here on P&G?
Yeah, poster child along with J&J as being one of the defensive companies, all-weather stocks that have been around for many, many, many years, and they're not going anywhere. And we did have an entry on this. We sold. I think we traded it last week, and we sold for profit, and then we traded it. I think on Wednesday, or sorry, I think on Thursday, and then we sold on Friday for tiny profit just to take off risk. And yeah, although profitable trade both times, this doesn't mean that you can't carry. It's a great company to carry. Right now, it's holding the 125 area, so that bodes well. Uh, who knows where the floor is? But ultimately, we have earnings coming up as well at the end of the month. Um, One of those companies you can buy and hold and sleep easy. And I think in a time like this, in an economy like this, in a market like this, that's pretty much what we want, right? We don't want the ridiculous, crazy, GameStops and AMCs of the world. We don't want that. We want solid companies we can go to sleep with. We know they'll be around. We know they'll continue to hold up and operate and do well as the economy remains this way. But especially more so when it turns around. And that's why we call them defensive companies. They can weather the storm. People will continue to use them, buy their products. Uh, you will always need, you know, uh, soap and dish liquid and detergent. You will always need, you know, uh, different household items, no matter where you live and no matter what income bracket you're in or what your wealth is, and no matter how the economy is doing. You might buy, you know, a smaller size of detergent, but you're still going to buy detergent, you're still going to buy soap, you're still going to buy, all these kinds of things. So that's really where you want to be in a slowing economy, in a recessionary type economy, in a downward trending market. Uh, as far as getting the timing right on entry, well, that's a very different conversation.
Yeah, timing it is always difficult, and sometimes we just can't time it perfectly. And anybody who says that they can I'm going to throw the BS flag on him. I'm not seeing any other questions, but I want to go ahead and close out. Riz, what are you taking a look at this week? I know you mentioned that we're starting to come into earnings season again here to close the year out. What are you going to be watching this week as far as
Yeah.
securities?
Yeah, I'm tomorrow. I'm going to take a look at what futures do at 6 p.m. Eastern. That will kind of give me a little bit of a sneak peek into the start of the week. Again, no guarantee how Monday will open, but it will give me a little bit of a highlight, kind of a sneak peek, I should say. And uh, I'm also going to be keeping an eye on the stocks that are reporting this year. I will most likely release the weekly earnings release little calendar thing for elite members, and of course on likely on Instagram as well. So we'll see when those companies release, on which specific day in pre-market or post after hours, and we'll go from there. But right now, very much all eyes are going to be on earnings for the next 2 weeks at least, as we head into November, start of November, and then November 2nd we have the Fed uh, rate decision. So we are in for a busy and wild few weeks, right? And Jazz says in here Tesla and Netflix. So right on, Jazz is on the money. These two are going to be big ones we're going to have to watch, with both getting especially Tesla getting absolutely demolished, and Netflix kind of just holding well with a nice relative strength, especially after announcing that $6, $7 price plan with some ads. So let's see. Definitely holding up well. If you can, it's not surprising to see that relative strength and base, like I mentioned earlier, being built around the 230 area for Netflix.
All right. Well, it sounds like we got lots of things going on in November, guys. So if you made it this far in the video, make sure you click that like and subscribe button so we can keep you informed as far as what's going on in the markets. And make sure if you get in that description there's a link to Riz's Instagram. That's a great resource as well. Make sure you click follow on that. And until next week, we'll see you next time. And for all of our elite members, we'll see you in the market on Monday.